All right. I think we are live. Welcome everybody. Thanks for being here on a Wednesday night. We got a little hump day stream here. I want to say, it means a ton to me that you guys are all tuning in here and coming to my first YouTube stream. I haven't done one of these before. I don't really know what to expect. I'm hoping that this could become maybe a weekly thing, maybe a bi-weekly thing, whatever. If you guys enjoy it, I'll do it as much as humanly possible. I will make sure that I get these charts out for you guys. We get talking about the market. We talk about the structure. We talk about maybe some education here or there. I'd like to just share some love with you guys, share some education, and give you guys basically anything I can to help you guys become better traders, because that's why I'm here. I want to make sure as many of you guys can make it to the end of your trading goals as humanly possible, can reach that destination. So stream one, I have no idea what we're going to talk about. I'm pretty good at just yapping about trading. I can talk about trading. I can talk about the market for hours. I mean, I get on live every morning and talk about the market and what I'm seeing and stuff. So we're going to start with just some stuff that's been on my mind, and we'll kind of just go from there and let this whole thing develop. It's been a while since I've had my camera on. I haven't been doing the camera thing for the short videos. I've been growing this little fake mullet out. I'm not sure if you guys can even see it, but I've been working on my little fake mullet. It's not a real one, but it's a little bit of a mullet. But kind of the first thing I was thinking about earlier today that I wanted to talk about is I've been playing a ton of poker lately. And I'm not talking like going to the casino and doing these high stakes games or anything like that, or even anything more than a couple $100 on a weekend or something. That's what I've been playing, and I've noticed so many similarities between poker and trading, and it's a topic that I can really talk about because it's really fascinating to me how the managing risk really comes into it for poker and trading. You have to be in an uncertain environment. You have to make decisions that you feel comfortable with and that are going to give you an edge over time, which that's not really something that a lot of people are familiar with in normal life, which traders, we kind of live in this weird universe where, maybe some people have some wiring all a little bit wrong, because you have to basically be in control of your emotions to a degree that other traders or other people, I guess, humans, don't have to. We don't have to on a day-to-day basis be in any sort of, emotional control, make sure that you're completely dry from having any crazy emotions. But when it comes to poker and it comes to trading, you do have to be in control, and you have to be able to see your emotions, and you have to be able to basically kick their ass to the curb before they impact your decision making. And so when I've been playing poker lately, it's been kind of a weird, parallels as I'm playing. I'll be gifted a pocket hand that I really, really like. And it just reminds me of when you find a perfect trading setup and you're basically thinking, all right, my chips need to be on the table here. I need to get entry on this as quick as humanly possible. But then you kind of have to slow roll it, and you kind of have to make sure that you're making the right decisions as you get into that. And same thing with poker. Like both of them, you have to kind of slow roll. You can't just go all in. You can't just jump right into everything. And you have to be able to understand, kind of the risk and the profit side of things. There's a lot of that bankroll management that comes into poker that also comes into trading. So I guess what I'm trying to say here, guys, is poker is an awesome way to understand trading and the emotions and the risk management side of trading. And so there's kind of a benefit to understanding the game theory of poker if you guys are traders. I do want to take a pause here and just say thanks to everyone who's talking in the chat here, guys. It's awesome to see everyone in here. It's awesome to see so many names. I know some of you guys, I see some familiar names. I see Bethany, I see CJ Dubs, I see some people that I know, and I see some people that I don't know, which is awesome because new people, that's exactly what we're looking for here. Getting everybody in, getting everybody to, maybe get their trading leveled up a bit. And the other thing about poker and trading, which I talked a little bit about this, but bankroll management and risk management is so important in both of them. And they're both decisions that have to be made without all of the information. So when it comes to poker, you're never going to know what the guy next to you is holding in his hand but you do know what you have and you do know what is being shown in front of you. And you have to be able to make decisions that are going to, over time, pay off. You don't have to make every single decision, the best possible outcome. You have to maximize profit every single time, but you have to make decisions over time that in a system are going to lead to profit. Over 100 hands, over 1,000 hands, over 2 years of playing poker once a week, twice a week. You have to make decisions that are going to be profitable in the end. You're not looking to just hit it big one night. You're not looking to just hit it big 1 month. You're looking for a system that over time is going to produce profit. All right, so the other thing we got here is, when you're talking about the poker environment and you're talking about, taking risks when you don't have all the information, it really has to be an analytical approach, which is the same thing for trading. You have to be analytical with your approach for trading, and you have to understand that the environment, the market, is not going to give you the answers. It's not going to give you the, this is a long every single time and you're going to take it 100% of the time it's going to pay you. It's never going to do that for you. There's always going to be this little indecision. There's always going to be this uncertainty, which we're seeing a lot. And I'm going to bring up the SPY chart, the daily, the weekly. We're going to talk about the market later during this stream. I'm going to pull up the charts. Right now I just have ES on here because, that's what's going on right now. But we'll talk about SPY. We'll talk about Tesla. We'll talk about all those things later. But when you're in an environment, when you're not getting all this information, you have to be able to make, kind of intuitive choices with everything that you're given. You have to be able to kind of, I don't want to say jump to conclusions. That's not the right way of saying it, but you have to be able to make decisions with half the information or a fourth the information, because you're never going to know what's going to happen the next day. You're not going to be able to wake up and know exactly what's going to go on, what news is going to come out. You're not going to know what card is going to get flipped next. You're not going to know what the guy next to you has in his hand. You're not going to know what information the trader down the street has that you don't have. You're never going to be able to have all of that information. But with what you have in front of you, you have to be able to make the best decision possible. And I think, one of the ways that you can get there is through experience. One of the ways you can get there is just a system of a strategy that you've built over time. And another way you can get there is just by putting in the hours, guys. Just by sitting in front of charts. Just by trading every day. Just by completely kind of enveloping yourself in the game of trading, which is the same for poker players, which, I'm not fantastic at poker. I play with like old dudes on my neighborhood. I play with like some 70-year-olds who have had a lot of time playing poker, but I don't know how fantastic they are, but it's good experience and it's also really, really fun. So I was having a conversation. So I do these one-on-ones, every now and then I'll meet up with a person from my Discord. I'll do a phone call and stuff, and we'll talk about just basically where they're at, how they're doing trading wise, and what they need to maybe improve on and what I can help with. And I just had one yesterday. So last night, awesome dude. I loved talking with him. It was fantastic. He asked me a question that got me thinking, that really kind of put me in a place where I wanted to bring this up today. He was basically asking me, he's like, so if 95% of traders fail, what makes me different? Because I don't want to be one of those people in the 95%. Because that's a statistic that's thrown around all the time. We see it all over Twitter, all over the news, all over all these stock social media forums is 95% of traders fail. And he asked me, he's like, why not me? Why am I not going to be one of them? And the best answer I could come up with, and it took me a little bit to kind of think about it, is you're here, you've been in the game for a decent amount of time, and you haven't quit yet. That betters your odds than all those 95%, because I can't tell you how many times I've seen people who they don't look at an ounce of trading education and then they quit a month later, or they don't try to formulate a strategy and they quit 2 months later. And every single few months that you stay working and you keep getting the hours in front of a chart, your odds increase. 2 months in, a lot of those traders who didn't have a strategy are going to quit. They lost all their money, blah, blah, blah. 6 months in, they managed to stay a little bit longer, but there's going to be more people who quit. 8 months in, more people are going to quit. A year in, those people were able to stick it out a little longer, but there's going to be more people who quit. A year and a half, these people thought that they were about to figure it out. They couldn't, they quit. Once you get to about 2 years, that's the cutoff in my mind, and that's the cutoff just from the experience I've seen working with a lot of beginner traders, which I do a lot of camps. I have a trading community that I talk to beginner traders. I also talk to people on Twitter and stuff where they DM me and we have these conversations about, how they're doing. And then we talk for a couple months, see how they're doing months later. In my experience, if you can get past 2 years and still have the drive to figure this thing out, your odds have increased a ton from that 95%, which is a 95% failure rate. So 5% that you'd succeed. I think they've 20, 30, 40% at the minimum if you can make it past 2 years. So anyone who's watching this, guys, if you're under 2 years, keep working, keep striving, keep trying your best to show up every day. Keep trying your best to learn things. Learn from those who you trust. There's a lot of shitheads out there. There's a lot of assholes who are going to say, I've got the golden ticket for you to get rich. Tune out those assholes. But if you're under 2 years, just focus on the grind. Focus on figuring out what works for you, and then try to get past that 2 year mark. That's where things can really change, and that's where your perseverance starts to pay off after 2 years. And then we got to talk a little bit about, too, why do those 95% of traders fail? Like, what causes 95% of traders to fail at the beginning? And it's a complicated topic. It's a topic that, it isn't easy. It's not going to be everyone fails for this reason or everyone fails for this reason. But a lot of the time, it's because people don't want to give what trading requires. And what trading requires is almost an obsession, almost a complete just diving in and understanding that this is going to occupy a place in your brain that you're not going to get back. And that's why I say that successful traders sometimes have a wire crossed or a little bit of a screw loose, is because you have to kind of give up a little bit to become a successful trader, in my opinion. Like I was talking earlier with the emotional control, that can bleed over into your normal life. And with traders who have traded for 10, 15, 20 years, it can get difficult to transition back to being a human of I need to be emotional and I need to be emotionally intelligent for my family, for my wife, for my kids. It can bleed over and it can get in this really weird gray area where it's like, the market closes, you go home, and you still have this robotic aspect. And then the opposite is true. You can have emotional things outside of life, and if you can't figure out how to turn those off once you open up the chart here, once you get on ES, that can really fuck up. That can really get to your account. That can really get to your P&L for the week, for the month, for the year, and ultimately, it can tank your entire trading. But one of the things that I don't see talked about as much is the aspect of people not feeling like they need to do as much as they actually need to do. We kind of have a bit of an epidemic, I've noticed, where people aren't willing to really get down and do the dirty stuff themselves. They want the dirty stuff handed to them. They want the strategies handed to them. They want the systems handed to them, which to a degree, you can find stuff. You can find people like me out there who are like, hey man, this is how I trade, blah, blah, blah. The thing is, that's not going to work exactly for you. You're going to have to figure out your own path and figure out what works exactly for you. And there's a lot of people who aren't willing to do that. And that's kind of the issue that I've seen with a lot of beginner traders is, they're not willing to take that extra step and basically, journal every trade that they take, figure out which ones work, why they don't, or why they do, and which trades don't work, why they don't work, and then move from there. And I'll kind of give you just a quick overview. When I was learning how to trade and trying to figure out how to be successful with this whole thing, one of the things I did was every single trade I took went into an online document. And it would basically say, like, when I took this trade, did it work, what setup it was, how much profit I got, what I could have done better, and then a tweak or adjustment I wanted to make going forward for setups like this. And every single week I was going back and I was reading, looking for patterns. I was looking for basically, what setup has been really killing it for me. Is it pennants? Is it flags? Is it these swing trading higher lows? Is it this lower trend line? What is it? And which ones are just not working for me? Because I need to cut those out and I need to focus on the ones that are working for me. You almost have to go at it with a scientific approach. You have to go at it analyzing every single angle, looking for patterns. And when you do that, you're more likely to see success in the long run because you're going to have data. You're going to have data to go off of where you can make adjustments. If you're just freeballing it, if you're just out there, buying calls, buying puts, going zeros, going ones, blah, blah, blah. If you're just out there doing that, there's no system there. There's no real data. There's no scientific approach that you can tweak a little bit and keep the rest of it the same because there's no fucking strategy. And you have to have a strategy. And you have to have basically, something that you can figure out how to make better. If there's nothing there, there's no structure there, there's nothing to make better. So you have to have a structure, and then you have to tweak that structure, and then tweak it again. Tweak it a little more. Tweak it again. Keep these parts the same because they're working. Tweak this part, tweak this part, tweak this part. And the other part I want to talk a little bit about after I go through the comments here. I want to read all you guys, make sure that I'm saying hi to everybody and stuff. But the other part I'm about to talk about is, looking at trading as some sort of emotional outlet, which I will get to here in a second. All right. What up, Kang, Tone, Daniel, RMB, Bathany, Patel, CJ Dubs, Alex, Dog Crypto. What up, what up? DS, what's going on? Jay, this will be recorded. RMB, talk about the 9 EMA. I'll get to the 9 EMA a little bit. We'll talk about it. I'll give you guys some 9 EMA love. I know that the 9 EMA has helped a lot of people. I get a lot of DMs about it because I use it daily and I blast it to the world. And it's one of my favorite indicators. Read Thinking in Bets by Annie Duke. I think that's a poker book I've heard of. Haven't read it though, but I'll put it on my list. What up, everybody else? I don't know what crazy Bull Bear is talking about when I don't reply to people. I'm doing that right now, so I don't know what that dude is talking about. What's going on? What's up, Ambular? Ambular's in the Discord. She's awesome. One of the best options traders I know. What's up, everybody? What up, chicken butts? That's funny. All right. Thank you, everybody. And I'm happy that you're all here. Let's get back into, the emotional side of things. So what I was talking about is, when we let, possibly our emotions take over our trading, because it's super easy to do. And it doesn't even have to come from anything crazy. It doesn't have to come from some sort of, crazy bad thing in life, or I'm angry this morning because I lost my job. It doesn't even have to be something like that. It could be like I woke up on the wrong side of the bed. It could be something like that. I didn't get my full 7 hours, 8 hours, or whatever it is of sleep that I need. And that can bleed over into the market. And then you can end up, using the market as an outlet, which you're going to get fucked. You're going to get dunked on if you're using the market as an outlet. And a lot of people, which I see, use the market as a way to almost gamble to a degree. They like that dopamine switch. They like that little hit of dopamine that they get when their calls that are down 50% get back to green and go 100%. They like the dopamine hit of trading something risky and then it ends up paying off. And they also, to a degree, like the gambling aspect of also losing. And that's a hard truth of trading, is some people like to lose. And they won't admit it to themselves. They like the feeling of knowing that they're not going to win often. and that they're not even going to win half the time. And that's kind of a foreign concept to some people, because some people, you guys aren't like that, but there's a population here that the gambling addiction of trading is so real that losing itches that itch anyway. And I have a really close friend who's like a severe gambling addict. And I talked to him about this because I was like, I've seen these things. And he's like, oh yeah, man. Like when I go into the casino or I go into DraftKings, like I know that if I lose, I'm going to scratch that itch anyway. And it's the same thing with trading. Some people get addicted to trading. They get addicted to the feeling of taking a trade, the feeling, the rush of it going one way or the other, the rush of it going up, going down, seeing their position in the green and seeing it in the red. You shouldn't be getting that feeling. You should not be getting a rush. You shouldn't be getting a crazy dopamine hit from trading. If you are, you got to take a step back, examine what's going on here, because the most successful trading is going to be when you come at it from a calm, completely unbiased lens, and it's really hard to do that when you're using it as a source of entertainment or you're using it as some sort of way to get your dopamine fix. So what I recommend, guys, is make sure that you have days that you don't take a trade. Make sure you have days where you sit on your hands and you watch the market and you completely resist the urge. You completely have control over yourself. It's hard. It's not fun. It's really difficult to completely control, the urge to hit the buy button, hit the sell button, but you've got to do it sometimes. It's imperative. You have to just be able to control yourself. And that's where the addiction side of, gambling addicts and trading, the blurred lines there, where, some people get addicted to the feeling that trading gives them. That's where things get really dicey. If you can't control how many trades you take in a day, which I'll just give you guys a rough an outline here for what I do is I have a 3 to 5 trade limit, 5 being the hard limit. So if I take 5 trades in a day on ES or SPY, I have to be done, regardless of what my day ends up like. My 3 at the beginning of that is my soft limit. So at 3, I have a little conversation in my brain where I say, hey man, you've taken 3 trades, you only have 2 more left. You only have 2 more until that's your hard limit. You got to slow down, make sure that you're only taking the best possible trades. And that's worked for me for a long time. I know I'm not saying anything crazy right now, but this is the first live. I want to make sure that we got some generals over here and made sure that we got some psychology talk. That's one of my specialties when it comes to trading is the psychology aspect of it. And while we're on the topic of emotions, I've been thinking a lot about this as well, because the SPY chart that we're going to talk about in a few minutes has some aspects like this where you can use emotions in your favor. You just have to be cognizant and aware of them. So what I mean by that is if you're feeling emotions, the rest of the trading population is likely feeling something similar. We're human. We have similar emotions at similar times with, the stimuli that we're all getting. So the stimuli I'm talking about is the market, the environment of, what's SPY doing. I'm just going to use SPY as an example to kind of help this out. With SPY dipping like it is, with SPY pulling back like it is pretty aggressively, you're probably feeling scared when you see your swing account, when you see your investment account. Other people are probably feeling fearful, scared, nervous, panicky when they look at their swing account and their investment account. Flip that around, guys. Flip that around. That's what good traders can do. They see that. They feel that in themselves. They said, I opened up my IRA today and I felt freaking scared. Flip that around. I felt scared. How can I take advantage of the other guy who's also feeling scared, who isn't going to realize that he shouldn't be acting on that emotion? Same thing can be said for day trading or, a morning dip on SPY if you're an options trader, or maybe you're looking at Tesla or something. There's a crazy sell-off. How are people feeling? Earnings even. How are other people feeling? How are the masses feeling during this time? Because the market is often going to prey on what the masses are doing. So when we see, large moves against what you would expect, usually that's the market preying on what the masses were expecting. The same thing, if we want to quantify this, we can be talking about when we have the data of, how many calls are owned, how many puts are owned in the current market. And a lot of times those underlying puts and those underlying calls end up being correct when maybe the market isn't looking the same direction. So if there's a ton of calls and it's from a Wall Street market makers are holding those, but the market looks bearish, you can expect the market, those calls, to end up paying off when majority of the people who are just average Joes are seeing this bearish setup. They're seeing this scary setup, and they're going to be selling. They're going to be panic selling when all the people behind the scenes, all the guys who wake up, walk down in Wall Street, and they're playing with millions and millions and millions, they're buying the dip. And that's another thing we can talk about a little bit too is with this whole tariff thing going on, there's a lot of fear. I have no doubt in my mind that the people at the top, the people who are best buds with our president Donald Trump, the people who are well informed at the highest level, are going to be buying the dip that we're going to see and the dip that we are seeing currently. They might not be buying yet. I don't know if they're buying yet because I have some levels mapped out and we do have a little bit lower, but I have no doubt that they're going to be buying the panic that we see if this goes lower. And I also have no doubt that they know exactly what they're doing. I have no doubt that they know that these tariffs are impacting and they know the buying opportunity they have. And they also know what's coming next, which is going to be a little bit of a transition into the market is bullish. We're going to be seeing some more language from Trump, from those top names that are going to indicate a bullish market when it's kind of been not much. It's kind of been closed mouth. It's kind of been silent about the market until now. It's kind of been tariffs are happening, which everyone knows is not bullish for the market. It's not helpful for the stock market, but it's supplying a dip for the people at the top. And what's going to happen is the panic selling, like I just said. When these, small dips turn into medium dips, average Joes are going to freak out. Retail is going to freak out. Suits are going to swoop in. Large money is going to swoop in. And pretty soon we're going to be back up towards highs. All right, guys. We are going to do a little bit of SPY analysis. I was just talking about SPY. I was just talking about these charts. I do want to pull it up, give you guys my thoughts on SPY and everything. And then I want to give you guys a chance to also maybe drop some tickers in the chat later here, and I'll pull them up. We can talk daily charts on those too, because this is a collaboration here. This is a stream. This is a live stream, baby. We haven't done one of these in a while, so it's gonna be a chance for you guys to get some charts, some analysis from me on stuff that you like. Where's my cat? So I'm sure some of you guys saw this, but my cat got surgery a couple weeks ago, and he's currently quarantined in a closet. So he's chilling in a closet all by himself. There's a baby gate up, and he wants nothing more than to leave that closet and get his cone off. He's got the cone of shame on too, so he can't even lick himself or anything like that. But in the future, when he's not quarantined and having the cone of shame on, he can come and chill with us, and you guys will hear him meowing and stuff. I love that little guy. He's a gem. Okay, so I'm on the 5-minute chart here. Let's get to the daily, and let's get to SPY here. Okay, all right. Oh, man. I have a radio voice. Maybe I should get into like sports announcing or something. Okay, we're going to actually start with the weekly. I want to do top down here. I'm going to start with the weekly, and then we'll get into daily after that. But here is the SPY weekly, and this is the market. This is, what everyone talks about when, the market's doing this, the market is doing that. And what we're seeing here is a little bit of an indication of some distribution, which I'm not sure if all of you guys are familiar with distribution, but what that means is that the current market cycle is not seeing enough strength to continue, and we're seeing some selling at the top, and potentially we're going to see some moves to the downside and a new structure formed. If you guys don't know what I'm talking about, you can always Google Wyckoff distribution, and there'll be a ton of of resources about that. But what we see when we see these distribution patterns is multiple tops in the same area, and then usually a low volume break and then a rejection after that low volume break, which you guys can see when we tested these highs and broke these highs here, we did have low volume. We had declining volume into those highs. And then we got this engulfing candle with high volume or higher volume, which is significant. The engulfing candle is from last week, and it also closed at new lows. So what that tells me is the bears had a lot of control there. The bears, they were able to basically grab this thing, push it to the downside, and hold it all the way down there. So that engulfing candle tells me that bulls don't have the strength right now to continue pushing this, and they also don't have the strength to break this resistance. We can draw this resistance in. Let me get my rectangle here. This is our current resistance, and it's pretty damn strong considering we've rejected it 3 times. This wouldn't be good analysis if I didn't bring up one of the reasons why we've rejected this so many times, and that is the tariffs news. Every time we've gotten to highs since Trump has taken office, he said something about tariffs. And I'm sure you guys see my tweets. It's not political. It's nothing about like, oh, I fucking hate Trump. No. It's just like, dude, you got to shut the hell up sometimes. Like, you're known as the market pumping president. We need you to continue pumping the damn market. We need you to pick up where you left off when you left office in 2020. We need you to continue pumping this thing. And he hasn't started his presidency off with that. He's kind of been talking about tariffs. He's been talking about how we need to kind of iron fist the rest of the world, which doesn't bode well for the economic climate right now. It's not fantastic for the market and SPY in particular. And we've seen that. You can see these 3 wicks here, 1, 2, or not 3, 2 of them. 2 wicks and then this rejection here. And they've all had to do with tariffs talk. But I will say, guys, on this weekly, if you scroll out here, does that dip look very concerning to you? If you were just to go off of what Twitter's saying, what all the traders in the FinTwit sphere are saying, you would think SPY is at like $400 a share. There's been victory laps from bears. There's been, people saying generational money is coming on this short. Guys, it's 2 little red candles. It's 2 little red candles. We had 2 little red candles here. We had 3 here. We had 3 here. What happened when we saw those? It just returned right back up to highs. So we're not really in the danger territory yet, but I'm going to move to the daily and tell you guys when we will be in the danger territory, or when we'll get into a much more dangerous situation with SPY. And that's going to be when we, or if we, are able to break this lower trend zone. So let me get it fully drawn here. That's our trend zone. And if you guys know me, you know I like trend zones more than trend lines. I prefer to think of trend lines as rubber bands anyway, which actually that's a good thing to talk about. Let's talk about that. So when I'm drawing a trend line, I'm not using it as a hard line. I'm using it as a rubber band with a little bit of give. You understand that? Like if I have a trend line on SPY, I'm allowing it a candle or 2 below with a little bit of wiggle room. I don't like to have these hard lines because the market is not always going to be exactly to the exact price that your TA is showing. And also your TA is not always going to be perfect, and it's not always going to be exactly the support, exactly the resistance on that exact line. Sometimes you're going to mess up, and sometimes the market is just going to want to trap lower, trap higher, and do some funky shit. So the rubber band thing really helps with that. But a few years ago, I made the switch to zones instead of the hard lines. And that's been a game changer for me. I don't even have to think about the whole rubber band theory. I don't have to think about that. I can just use the zones. So I use zones. Here is the zone on SPY. And you can see we've tested it the last 2 days. We haven't broken it yet. If we test that lower side tomorrow, it would be about 590, maybe a little bit lower, 589-ish. If we break 590 or 589 tomorrow, watch the hell out, guys. That's going to be the time where we need to start to have our support levels. We need to start to have our dip buy levels because this thing is headed lower. And I'm going to give you guys some of those in a second here. I just want to say, guys, please like this video. Please like this thing. Hit that little thumbs up. And if you guys do that, then maybe more people will see it, and then we can have more streams, because I'm having a great time. I hope you guys are having a great time too. This is kind of just a fun thing to do on a Wednesday, and it's also going to prepare you guys, give you guys some charts that you guys can watch for the rest of this week, Thursday, Friday, and then next week too, because I have a list on my little sticky note right here of 5 names I want to go over after SPY. And they're good names, and I'm going to go over some trade plans potentially, so you could take calls, puts, longs, shorts, whatever you're thinking. If these levels, if these setups break, and I'll give you guys a little bit of a hint on some of these. Reddit, Nvidia, Bitcoin, and SoFi are 4 of them. Those are what we're going to be going over here in a minute. And then you guys will have a chance to kind of give me some tickers that you want to see. But like I was saying on SPY, if we break this trend line, what are we looking at next? What zone am I personally looking at? The first one is going to be 580. And the reason is, when we see these dips in a bull market, 5% is usually when we start to see buyers step up. But I do want to make this very clear to you guys. I think if we break this trend line, we're going to get deeper than 5%. So 5% would be 580. I think we're going to head down towards that 10%, which would be 550. I'm going to draw an entire zone where that 5 to 10% dip area would be. So this would be our 5 to 10% dip, which, if you guys have watched my videos in the past, you know that bull market 5 to 10% dip on SPY is usually the bottom. I think I would wait to buy until we get closer to 550. I'm thinking 550 would be the area that I would start deploying my cash. And it also, it kind of fits with these previous highs here. We had a double top on SPY back in July and August that didn't actually work out. It dropped a little bit, and then it went up, broke it, and broke out. That's going to be a key level. Bears, if they're able to come down, they're able to test this area. That's going to be an area where bulls step up and bulls really push to buy and return this to the uptrend. So for me, 560 is when I'm going to start buying, and 550 is when I'm going to assume that the bottom is near. So take that for what you will. Trend line breaks. I'm thinking 560 to 550. That's my analysis on SPY right now. Oh, hell yeah, guys. I'm seeing Alex said great education. Thank you very much. CJ said best therapy session I've ever had. That's kind of what these are. You know, that's kind of when we talk trading psychology, emotions and stuff. It does kind of start to feel like a bit of a therapy session. Mr. 3 Points. What's up, man? Another guy from the Discord. I see Jules. Jules, what is up? Jules, another awesome trader from the Discord. It's good to see you guys in here. Yeah, so getting back to SPY here, 560 to 550, which I'm just going to move this zone completely. But, you know, we do have this nice little support here around 580, but I do want to move this down. This is kind of my bottom area. If we're below this trend line, which let's make it include these highs here. So it's actually about 562 down to about 550. So 562 to 550. That's going to be the area that I start buying on SPY. And I'm actually going to be buying VOO, VOO. That's the one that I prefer to trade over SPY. But I like to do analysis on SPY. I like to do, my SPY work, because I've traded SPY, and it's also just a little more universal than VOO. Not as many traders are active on VOO, VOO. The other thing I want to talk about with SPY here, which let's get rid of these things, is the bearish setup that we have. So just to make this clear before we move into this, I'm not bearish on SPY right now. It all leans on that trend line. It all leans on if we can hold that lower trend line. If we can do so, I'm gonna stay bearish or bullish. I'm gonna be bullish as long as we can hold that trend, as long as we can hold that higher low trend. If we break that trend line, that's when I personally would completely flip into that we need more downside before we see upside. All right, let's get into this bearish setup. I was talking a little bit of distribution on that weekly. It's much more clear on this daily here. We have this double top area, which, let me get a little line here. We have this double top, and this is another example of why I use zones, because you can see we have this top and then we went higher and then we rejected. So you can scratch that, you can grab the zone, and the zone just makes way more sense. You know, you have multiple tops in this area from about 608 all the way to about 613. But I want you guys to notice the volume on this last breakout, because I'm a volume trader. Like we said, you know, like I've always basically yelled. If you guys haven't noticed, I'm not very quiet on Twitter. I'm not very quiet as ThiccTeddy. I'm very loud. And one of the things I'm loudest about is that I love volume, and I think volume is one of the best indicators on the market, which, by the way, Volume Camp is coming in March. Just going to plug that real quick. Volume Camp in March in my Discord is going to be fantastic. I did a Volume Camp last year, but I've went in, I've decided what I thought was lacking in that camp, and I've improved it for this camp. So Volume Camp 2.0 going to be happening in March. So keep your eye out for that. Okay, what I was talking about here with the volume side of things is when we get these lower volume breaks to highs, I call it a fake orgasm, because that's what we saw on, and if it was, I'm trying to remember the book. For some reason, the only book that's coming to mind is Trading in the Zone, but I know that's not the right one. It's the other one. What's the other one? Mastering the Trade, sorry. So John Carter in Mastering the Trade calls this a fake orgasm because it basically hits the selling climax with lower volume. So it's like, oh, everyone's thinking this is the best thing ever. And then it's fake. And I'm going to be 100% honest. I'm a transparent trader. This one caught me. This one really caught me. When we broke to highs, I thought we were headed higher. I took some SPY calls, got dusted. I really did think we were heading higher. I got caught with the fake orgasm. I got hammered with the fake orgasm. And if you guys want to, read more on that, I can get some education from John Carter on that and post it on my Twitter. But basically, low volume breaks to highs or declining volume break to highs is a fake orgasm. That's what we just saw on SPY, and that also lines up with what we see from Wyckoff when we're seeing distribution, is a low volume push or a trap to highs. When we see that distribution, one of the last legs is a low volume push to highs. And that's what we saw on SPY. We saw this low volume push to highs, and then we saw this massive sell-off. And the volume really came in on Friday, which sometimes on days that are OPEX, we see crazy volume and then it doesn't have any follow-through. But Friday's had follow-through. And in my Discord, I do a weekly watch list, and I basically said, I'm not going to have a strong opinion until we see if there's follow-through this week. And so far, the Bears have had follow-through. Monday, they went lower. Yesterday, they went lower. Today, end-of-day rejection after the Trump tariff news. We went lower. All right, we do have some questions here. Is the Volume Camp live, or can you go back and watch the videos again? So the Volume Camp will be recorded, and then the videos will be posted for a certain period of time. It's a pretty long period of time. The Swing Camp is still posted, and I did that, I can't remember if that was November, something like that. Those videos are still posted, so it'll be up for months in the Discord. So you don't have to make every single one of them live. You can watch them after the fact, and you guys can catch up as your schedule kind of lets you. All right, so what I was talking about is the volume that we've been seeing and the follow-through that we've been seeing, and that's really going to be important as we approach that lower trend line we're talking about. If we can break that trend line with high volume, that'll be one of the things that I would consider confirmation of the trend line break. The other thing, let's get that trend line back up here. This will be the last thing I talk about before we move into some other names, some individual stocks. Let's get this trend line here. Boom. Boom, boom. Okay, so I did a little like path on Tesla where I said this is a likely path for Tesla to take over the next week, 2 weeks, month. I'm gonna do the same thing for SPY here, and I won't post this on Twitter. So if you guys watch this video, you guys will get kind of a free little path here that everyone else won't get. And so what I'm gonna be looking for here on SPY, two things if this trend line wants to break. If it breaks to the downside, high volume. So one of the setups I'll be looking for would be this plus an increase in volume down here. So volume has kind of died off since that big Friday candle. I would want to see a volume peak or surge on the break. So if it's tomorrow, if it's Friday, if it's Monday, we break to the downside, a volume surge. That's simple. What that would tell us is that the sellers have a lot of strength and the sellers were able to break that key level with a lot of selling momentum. It's simple. A lot of strength, a lot of volume equals lots of sellers. That's what we want to see. Very, very simple. The other thing I'll be looking for would be if we get a break and it's not high volume. So maybe we break this. It's not high volume. Sorry, that's just an arrow. I need to get the path. Here we go. If we break this and it's not high volume, a pullback with lower volume, and then a return to lows. That's our second option here. The pullback can either be number one, to the trend line, or number two, to any of these previous supports. So maybe it wants to come up, test the trend line, and go lower. Maybe it doesn't want to exactly test the trend line. We want to go lower, and then we want to come up and we want to test this previous support level and then go lower, which the previous support level I'm talking about is right here. So maybe it wants to come down, test that, and then go lower. The idea here is that the bears would have enough strength to flip a previous support level into resistance, which one of those support levels is this trend line. The other one is this support level that I have right here. If it's able to flip one from support into resistance, that would be very, very strong. It would indicate bearish strength. Okay, Sam says, please like the stream. I agree, guys. I'm on Sam's side here. Please like the stream. Over 100 likes, boost the creator. I don't know exactly what that means, but if we get 100 likes on this thing, I will be over the fucking moon. And we would have another one scheduled tomorrow. If we got 100 likes on this thing, I would have next week scheduled probably right after this. So like the hell out of this thing. And if there's enough people who enjoy these, we'll keep doing them. It might not be on Wednesday every single week. It might be a Tuesday next week, a Thursday the week after. But I'll keep doing them if you guys enjoy them and if you guys like them. Okay, the other possible path we have here is very, very simple. We bounce off this trend line, and then we have to contend with this high here and potentially go higher. But this 610 to 612, 13 area is going to be really, really difficult. We've rejected it 1, 2, 3, 4 times. And not to mention if we zoom in a little bit here, we're going to have this trend line on the upper side to contend with as well. Let me get a little zone in here. We're going to have to contend with this upper trend line that we had. So it's a little bit of we have a resistance there. If we got above that, we would have a resistance here. And then we could go higher. So there'd be a lot of issues. There'd be a lot of resistance. There would be a lot of selling to push through. It would be a tough path. And lately, we haven't been showing the volume to do that. When we got to highs, it was on low volume. When we pushed to highs here, it was on low volume. We haven't been seeing the volume to do that, so I'm not really sure if I'm on board with that right now. Things could change by next week. Maybe the next stream I do, I'll have a different opinion. We'll see. But for now, those are the three things to look at, guys. Number one being the high volume break. Number two being the break, the flip of a support into resistance and then lower. And the third one being a potential bounce. But that one, you've got a lot more things to deal with, and it's not as great of a setup as those other two would be. All right, let's get these drawings off here. I just want to say again, guys, I am so freaking grateful that you guys are tuning in here. I feel just blessed to have as many people as are here right now watching me, listening to me talk about charts. And I want you guys to also know that I do everything in my power to put out good stuff for you guys, good education, good graphics, good videos, to make sure that the stuff that I'm putting out is actually helping you. And I don't post a damn thing that I don't actually use. You won't see me talking about these crazy swing option strategies because I don't do that. You won't see me talking about dark pool because I don't do that. You won't see me talking about ICT strategies because I don't use that. It's only stuff that I use. And I don't know. I feel really, really blessed right now to have this many people in here and to have this many people that I can help, and that maybe, my words, my strategies, my trading, I guess, education might be able to help you guys. So it's really cool. So thank you, thank you, thank you. And the first one we're going to talk about here is Reddit. Crazy, crazy chart here, and one that I'm watching very closely for a possible swing to the upside. This is one that I would not mind taking a call swing on, which let me talk about that real quickly. I've been doing some more swinging of options lately. I've always been against swinging options. It's never really been my thing. I've been more of a commons where I go in heavy with the money I've accumulated over the years, and I just swing trade with a heavy position, and that's kind of been my strategy, my forte when it comes to swing trading. But lately, I've been embracing a little bit more of an option swing trading strat, where I find something I think has momentum. I try to buy it on a Monday and hold it until a Friday. I don't like holding over the weekends. I don't like waking up on a Monday morning at 4 a.m. like a crackhead. Like, this is me on a Monday morning at 4 a.m. like waking up out of a complete dead sleep. I'm sweating and I grab my phone. What's Reddit doing? Did Reddit gap up? Oh my God. I run to my Weeble. I'm like bamming my phone. I'm like, is it up? Is it down? What's SPY doing? What's the market doing? And at 4 a.m. on a Monday, I do not need to be doing that. You know what I mean? So I've always been a commons trader, but these swings throughout the week, Monday to Friday, have been going well for me. I've taken 4 so far. 3 have been green, 1 has been red, and Reddit is the one that I'm watching next. So you guys are getting kind of a freebie here from me. If Reddit is able to hold momentum the rest of the week, I'll be looking at calls next week on Reddit. And I'm going to tell you guys exactly why here, and it's going to have to do with another zone, which I guess I'm just a fiend for zones here. But there's been a really, really key level on Reddit that got tested this week. Let me stretch this thing all the way back here. And it's kind of the last line in the sand on Reddit. We're sitting on a cliff to start the week, and Monday, Tuesday, really nice bounces off of this zone. So the first thing here is you guys can see how many times this zone was respected in the past. 1 rejection here, so there's a resistance, and then we flipped it into support right here, tested it again right here, tested it again right here, and tested it again right here. So 1, 2, 3, 4, 5 times this zone on Reddit has been respected. We popped up, we trended to the upside, we found a top around 230, and then we rejected all the way down to this zone, which starts about 162. So 230 to 162, significant pullback. There was no sign of this slowing down before the week. I posted this chart after Friday, and I said, if this gets a bounce in this zone, this would be on my watch list. This would be a heavy watch for me. I didn't have any idea if it even was, because this thing was selling off like crazy. Monday rolls around. Early morning Monday, this thing is getting crushed. Fucking drilling a hole. This thing is searching for oil at the center of the earth. I mean, this thing drilled all the way to fucking China to start the day. By the end of the day, we cruised back to the upside. We closed with a green hammer candle, and it was immediately top of my line. This is a chart that I want to watch. This is a trade where bulls are finally stepping in. And the reason that we can tell the bulls are finally stepping in is the price action of we keep sweeping these lows and keep buying them all the way back up. And then today, we gapped up, and then we were able to hold a green candle higher than yesterday's candle high. So what that tells me is bulls were able to break yesterday's high and then close that candle up there. If we're able to hold above this zone for Thursday and Friday, Monday, I'm going to be looking at Reddit calls. Simple as that. What I'll probably look for is somewhere a month out, 3-4 weeks out, and then probably like 180 calls. It depends where the price is. I want to keep it within 10% of the underlying price. So if price is sitting about 170, I'll want to keep it within 10% of 170. So something like 180 calls a month out. That's what I'll be looking for on Monday. All right, next one I want to talk about here is NVIDIA. So we had earnings on NVIDIA, and we can kind of pull up the 5-minute if you guys want to look at what happened. We'll go to extended hours here. So earnings on NVIDIA, kind of a nothing burger. Nothing really happened. We got some volatility, and the market makers ate all of the premium so far for the people who gambled on the earnings with calls or with puts. That's all going to go to the market makers tomorrow morning. That's all going to go to the people who sold those calls, sold those puts in anticipation of a potential IV crush, which we're probably going to see tomorrow unless there's a huge pre-market move on NVIDIA. Let's get back to this daily here. The biggest thing currently on NVIDIA is the upper trend line that we just formed. It's really, really simple. This upper trend line is almost to the exact, you don't even have to have a zone on this one because it's to the exact price. Our first high here, crazy, crazy high volume rejection back in January. Our second high here, not a crazy, crazy high volume rejection, but the candle right afterwards was a crazy, crazy high volume rejection. Our third rejection took a little bit longer. It was Tuesday, February 18th. We rejected. And then a few days later, we got that increasing volume sell-off. Earnings today, price didn't go crazy after earnings, even though they did beat on revenue and EPS. What that tells me is maybe there's not as many people buying this at the current price as we normally see on NVIDIA. Because NVIDIA is typically a name where buyers are going nuts. It's something that everyone wants to get at a discount. Everyone wants to buy the dip on NVIDIA. Perhaps we're kind of past that now. Perhaps there's not as many dip buyers on NVIDIA as there once was. And that can kind of be shown with this declining volume rally we saw. A huge dip on NVIDIA. Buyers stepped up, but they didn't step up with high volume, which can be a concern for people who are looking to buy this in the longer term or even buy this for a potential swing trade. And now we have this upper trend line. Sorry, I might sneeze here. If I sneeze, I'll try to mute my mic so I'm not, sneezing right in your ASMR, achoo, into your ear. But trend line here is going to be the biggest thing to watch. And right now, there's some separation between current price and that trend line. So for me, this has to lean bearish until we get above this trend line. So that's a big one for the market as well. I can't be bullish on the market until one of the market's biggest players like NVIDIA is bullish. And right now it has that upper trend line. It's not bullish. It's kind of supporting SPY getting that full 10% dip down to that 550, 560 area. Just another thing kind of piling up on SPY, potentially needing some more downside. All right, I'm going to move on to my third name here, which everyone knows is Bitcoin. Everyone knows Bitcoin. Everyone knows what Bitcoin is. Everyone knows, I mean, maybe not what Bitcoin is to a technical degree, but everyone knows of Bitcoin. And everyone also knows somebody who randomly became a Bitcoin millionaire back in the day. Like, dude, there's people who were like selling weed online from my high school who are Bitcoin like millionaires now because they were operating in Bitcoin. There's also some dude who like sold like action figures from my high school in Bitcoin back in the day and then just never ended up selling his Bitcoin. And now he like moved to California and lives on the like beach and no one knew how. And then come to find out he just held his Bitcoin this entire time. And then he started posting about it and we all kind of heard his story. I'm like, what the fuck? We were kind of wondering how this guy just got filthy rich. Bitcoin, baby. But a little bit more I guess recently, Bitcoin is getting fucked. Sorry for the swearing, but it's the only way to say it. Bitcoin is getting fucked. What happened is Bitcoin had a double top up here around 108K, and it had a support around 92K, which we can draw two little zones in there. Let's draw the first one up top here. Second one, let's draw it down low here. Okay, perfect. Stretch them. This was our support and resistance on Bitcoin. Double topped 108K, came down, tested 92K, knife through butter. Hot knife through butter. Absolutely crushed it. High volume on the sell-off. I think we're seeing 70K on Bitcoin. I don't really have too much to say about this other than I think this needs to visit these highs here, which sit about 70K. I'll draw another zone there. I think Bitcoin's headed down there. If you're a Bitcoin holder, I apologize if you're looking for bullish outlooks. I'm not going to bullshit you. I'm not going to tell you something that I don't believe, and I don't believe Bitcoin is bullish right now. I think what we're going to see, and we'll kind of talk about this in a little bit with Tesla, is we're going to see a path similar to that Tesla where we got a pullback and then we just crash lower until we get to this area where there was previous resistance, previous support, a previous key level. And so for me, Bitcoin is bearish. Bitcoin 70K is on the horizon. Like I said, not fun to hear if you're a Bitcoin holder, but I do think it's on the horizon. Okay, let's get a little bit further here. Let's just move right into Tesla. And we have Tesla and we have SoFi left. Those are the last two charts I have. And while I'm doing that, guys, put some charts in the chat that you want me to look at. Depending on how many we get, I'll try to get to them all. I'll try to give a small opinion, short opinion on them all. If there's too many of them, I'll get to as many as I can, and then we'll close this thing out. But it's been a fantastic time. Let's get to Tesla here. Okay, this is our Tesla daily chart here, and we have a pennant that formed over the last, let me check here, from November all the way until January. There was this pennant, which upper side and lower side were pretty defined. Why can I not draw this? What's going on here? It keeps putting this thing right where I need it to be. We'll just go from there and then we'll fix it. Okay, there we go. So upper side and lower side were very, very defined. And we broke to the downside. We crushed to the downside. We got a pullback, and then we crushed to the downside lower. And now we're in my buy zone, just to be completely clear and honest, and not really, beat around the bush here. My buy zone consists of all of these tops from 2023 and 2024, and we're currently in it. So we had a top at about, 300 in July 2023, about 277 in September 2023, 266 in October, 266 again in December, 270 in July, 266 in September, 271-ish in October of 2024. And this is the area that I'm going to be looking to scoop some Tesla. I already have some Tesla long, and disclaimer, my average is stupid. It's absolutely dumb, stupid, crazy. It's like 150 something, 155, which was down here on this dip here. And that's not to suck my own dick. I'm not trying to be like, hey guys, look at my Tesla average. No, I had a buy zone. It entered it. I bought it. My average is awesome. But I'm going to average up on this inside of this zone. I do think this is a really, really good zone to add in. And the other thing we can do here is, let me get an SMA 200 in here real quick, because that is right inside of this zone as well. 200 SMA, you guys can see, is right below current price. And then let me get volume profile in here. We'll scroll out a bit, And you guys can see that volume profile is also showing a shelf right below my support zone. So everything is lining up with Tesla getting a bounce between 300 and about 270, 265. All right. Last one is going to be SoFi. Pull this up here. SoFi has a crazy head and shoulders right now. If you guys are familiar with the head and shoulders, you know that it's one of the more bearish setups that we can see. It has one of the highest win rates, but lately, head and shoulders haven't been working out like we normally see, which that's why it's important. I was talking earlier in this live stream. That's why it's important to make sure that you have your setups and you're keeping track of them, because you'll be able to see trends with different setups. So like head and shoulders, I've been noticing end of 2024, beginning of 2025, they're not having as much success as they were 2023, beginning of 2024. And so take this for what it is, but there is a head and shoulders on SoFi. Let's get the little curves in here so I can kind of bring them to your attention. And then we're going to clone this baby twice. Oh, it's a little lopsided. Oh, man, that messes with my brain when it's just a bit lopsided. You know, it's just like a little bit off, and it's not a perfect curve, but I don't want to waste your time trying. Oh, I have to. Sorry, I have to. We're going to fix these real quick. Boom, boom, and boom. Now they're perfect. Shoulder, head, shoulder. Both the shoulders happened about $17 up to about $17.10. And then the neckline, if you guys know how to trade a head and shoulders correctly, the short happens when the neckline breaks, which I messed that up just now. But here's the neckline. The bottom side of it is about $13.70 down to maybe even $13.50. The upper side of it, $14. If we break that neckline, SoFi's in trouble. SoFi is in a ton of trouble. If we break it, I mean, we're probably seeing 11 at the minimum. I mean, first target is 11. After 11, it could potentially even go down to $9. So everything medium term on SoFi revolves around holding this 114 down to about 113.50. We have to hold that. It's sitting on a cliff, similar to what we were saying with SPY with that lower trend line. Tesla back when it was in that pennant, it's sitting on a cliff. It has to hold the support level that it's sitting on right now. Similar to Reddit even with that support key level that we're talking about. If it can hold this, it's likely to go up and test 17 again. If it loses this, scary days for SoFi. All right, let me scroll through here, see how many we got. I'm going to try to get to a decent amount of these before we got to hop off. Okay, I see BlackBerry. Let's talk about BlackBerry. Ooh, okay, interesting chart here. This thing has been, really interesting over the last few years. It did kind of reach this nice low back in 2024 where we soaked this bottom. I always like to see bottoms like this where you get these higher lows and you get this consolidation. If you guys remember Incredible Bob, he called these like a frying pan low, where you'd kind of sizzle off the bottom and then get back into the frying pan and then sizzle, and then eventually you would pop like this. But this has been a pretty significant move too. We bottomed $2 and we're up at $5 right now. We got above $6, so a significant move there. We have been seeing volume the last few days as well. Friday or Monday and Tuesday actually has been the high volume days. Overall, we've been seeing some volume increase as well here, which is interesting. Since 2025 started, BlackBerry has been increasing in volume. We've been popping to the upside. We also saw some accumulation down here at lows, which you can see with these volume spikes. Pretty clear accumulation down there where we're seeing buyers step in and push the price up with high volume. That's what you want to see at a bottom like this. But since then, yeah, we had a pretty big rally, increasing volume even, nice volume. And then we've had this pullback from about 620 to about 470. I would say buy zone on this is this area right here. That is going to be the buy zone that I've got on BlackBerry. Let's get volume profile in here. Yeah, that's kind of what I expected, to have a little shelf in this area. Have a nice little shelf there. That's my buy zone for sure, which sits about $4.30 down to about $4. That area has the volume to back it up. It also has the price action to back it up. So yeah, I actually don't mind this. This pullback obviously is going to need to decline in volume. You know, we got that big day yesterday, high volume, very, very high volume. We're going to need to see this decline in volume, but if it can just lower volume, pull back into this zone, I'm on board with this. I don't mind this at all. All right, next one up, we got Clove. Oh man, this shit brings me back to 2020. Oh man, this thing brings me back. This was a SPAC if I remember right? This thing hung out around $10. Yeah, this was a SPAC. Oh man, this was like back in the Atlas days maybe, if I can remember right. The old Clove days, the old Fubo and Clove days. All right, let's talk about the chart though here. Okay, very interesting chart here, honestly. Earnings tomorrow? Tomorrow night, Clove has earnings. So keep that in mind before you enter, if you're holding a position, you know, think about maybe managing that risk, because earnings tomorrow night. In their last earnings report, they closed the day at 430, opened the next day at 380. So good 10% move to the downside. Consider what that would mean on your position. I mean, if you've got a couple $1,000 into it or whatever you have, you know, take a calculator, times that by 0.9 and see if you'd be comfortable losing all that money, because, you know, you could potentially overnight end up down 10%. And if you had 3K into it or whatever, that's $300. Whatever it is, do the math, see if you're comfortable with it, see if you're comfortable losing that much. Always got to give a little disclaimer on earnings reports. But for the most part here, this looks like it's kind of finding a topping area. Just from what I've seen here, is there's not really been any significant ability to break this high that it's formed. So we had this high back in October around 470, 475. We found another high in January there, another one in February, and then last week we found another one in that area. So not able to get above that level. It's not really looking like there's a ton of bullish strength. The one thing that could send it through that level is the earnings report. You know, earnings potentially could just rocket this through this resistance, that 470 resistance, and then it could be like, oh, you know, what the fuck is that resistance? Now it's going to become support. But what I would say is, let's do a little path action here. How about that? Let's talk about what this could do and what potentially you should be looking for if it does do that. Number one, wait for the earnings to enter for sure. Wait for the earnings, and if this after earnings rockets to the upside, so say this, you know, ends up at, you know, like 520, something crazy like that. What we would want to see is, we would want to see this. Damn it, I did another normal arrow. That's my bad, guys. If we rocket to 520 or something similar, after we get above this resistance, what you're going to want to look for is a retest. Retest that resistance, flip it into support, take your long and ride that thing. Because if it can flip that resistance into support, it has a lot of upside. If we go back, we scroll back, this thing has room to 650 is the next level after it breaks this 470. So upside is there. It just has to get above this before I'd be interested at all in trading this. I'm not interested in touching this. I'm not interested in sniffing this. I'm not interested in giving it the whole... I'm not interested in any of that until this gets above this resistance, come down, test it. and flips it into support. Okay. I see our next one is Intel, INTC. Oh man, this is one of those that makes people act crazy. Some guy got, I think it was $600,000. Maybe it was like 800. Maybe it was upwards of $1 million from his grandma dying. Puts it all in Intel right before this earnings when it was like $30 and cuts his $1 million almost in half. Almost in half. Like, imagine that. Imagine you find $1 million on the ground tomorrow. Imagine you wake up, you go out to your car, there's $1 million sitting in the back. Imagine you just go to the park and you fucking burn a half of it. It's not a half. Like, the exact math is like 66% or whatever he has left. So he lost 33 point blah, 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 whatever, if you want to do exact math. But imagine you burn almost half of it. Or imagine you like get $1 million and then you just like kind of lollygag on it. And you come back one day and your dog ate a third of it. Your dog ate a third of it just because you were too lazy to do anything about it. That's what happened to this guy. This guy lost 1/3 because he was an idiot of $1 million. $1 million can change your life today. $1 million, you put that in dividend stocks, you put that in stuff like that, your life can be changed for the rest of it. And if you can just, build that up a little bit, and then you can be done working if you'd like to. But no, this guy got $1 million, young guy got $1 million from his grandma, puts it all in fucking Intel, a computer company from 1991, a computer company from 1888, a computer company from 1740 that creates brick computers now, that is outshined in every single aspect of their company. This guy did that and lost all. I don't know why I went off on that tangent, but don't be like that guy. If you guys get a hefty amount of money somehow, be smarter with it. But let's look at the chart here. And honestly, the chart here is kind of awesome. Like, is pretty good from a technical perspective. We have this zone here at the bottom that we've tested 5 times. 1, 2, 3, 4, 5 different times. And if you would have asked me before this rally if I thought this zone was strong or if I liked this zone, I would have said, probably not. It's not fantastic. I'm not loving it. We're kind of creating lower highs into it. But this last bounce out of this support is crazy. This last support bounce is nuts, high volume. And what that tells us is buyers are actually getting down with this. Buyers are actually taking their orders, putting them in, and filling with Intel. They're actually stepping up and buying the stock. And for this amount of volume, it has to be people with way more money than us. With way more money than all of us combined. It has to be Wall Street. It has to be the suits. It has to be very, very rich, smart individuals with possible insider information. I mean, I'm not going to say anything like that, but insider information possibly. They have to know stuff about Intel to be buying like this. And so that gives you a little extra push of confidence. It gives you an extra little bit of, okay, I understand why this is popping like it is, why the volume is popping like it is. They know something. They like it. They like what they're seeing. And honestly, personally, I like this too. The next thing I want to see on this is a flip of, let me get this drawn in, a flip of this zone here, which sits about the top of it, 2250 down to about 2150, just approximately. If we can come down, test that level, and move higher, I'm going to be bullish as hell on Intel. I will be basically singing from the rooftops how much I like Intel. And if we can flip this zone, the first level is going to be this 26.30-ish up to about $27, $28. And then after that, I mean, we've got room to $30. It's pretty simple. So we flip this 22, 26 is coming, and then 30 is coming. Very simple. Yeah, I like the chart. All right, guys. Unfortunately, I do think we're going to have to cap it off there. I only got to a few of you guys' charts. Next time, I'll try to leave a little bit more time at the end of the stream for you guys. But I got a little yap and I got a little talking this morning. Not this morning. Earlier this stream about, why 95% of traders fail. I got talking about poker, similarities between poker and trading and stuff. I hope you guys enjoyed it. I do want to leave you guys with this. Trading is hard. Trading is going to be difficult at every single turn. It's not going to be something that comes easy. And if it comes easy to you, you might be one of a kind. You might be one of the only fucking people in the world who figures out trading and is all of a sudden a genius at trading. But stick it out, guys. That's all it is. Keep showing up every day. You don't even need to trade every day to show up and get better. You can paper trade every day. You can just sit and watch the market and you can get better every single day. You can watch the candlesticks. You can watch the volume. You can watch the news. You can watch how the market reacts to the news, how it reacts to the volume, how it reacts to lows, highs, all this stuff. You don't even have to be trading to get better. Trading will help. Experience actually in trades will help. But just showing up, looking at charts, doing the little things, putting your eyes on a screen, making sure that you're sitting at the desk, making sure that you're keeping up to date will do a little bit of good. Will do a lot of good. So just keep showing up, guys. Keep putting in the work. Keep showing up to these streams. Keep checking out the education, whether it's mine or whether it's Investopedia, whether it's other YouTubers, whether it's, I don't know, random people that have good education, whether it's your own type of education. Just keep slowly getting better, brick by brick by brick by brick. This is not a get-rich-quick scheme. This is not a next week you're going to be a millionaire. This is not a Lambo next week, 1 week of trading, I'm here with my new Rolex. This is not that. This is build the foundation, understand how to create a strong foundation, work on fortifying that foundation, watch that foundation crumble 5 times, think about what you did wrong building that foundation, build another one, watch it get flooded, build another one, watch an earthquake take it out, and then you build your final foundation that's going to make it through all those things. That's what we're doing here. We're building a foundation, and then you're going to slowly build up, and you're going to obviously make mistakes along the way. You're going to obviously have catastrophes along the way. You're going to obviously need to rebuild along the way. But just keep doing nail by nail. Keep hammering in one nail. Keep hammering in a second one. Keep hammering in 5 a day. You don't need to sprint through this thing. You can just slowly walk your way through. All right, guys. I appreciate all you guys for watching this again. Drop a little thumbs up on it. Get me boosted through the algorithm. First YouTube stream. I assume there'll be a lot more because I've had a great time with you guys. I hope you guys had a fantastic time with me. That's going to be the stream. Thank you, thank you, thank you. I will hopefully see you guys next week. Let me know if you need anything on Twitter. You can DM me. You can also drop it in the comments on my YouTube videos. I'll do my best to check it out and reply to you, give you guys as much good information as I humanly can. But from the bottom of my heart, thank you all for being here, and I will see you guys